Hi, I'm Liz Lumley, and as of last week, I was deputy editor of The Banker, and today is day 2 of my time as head of content for banking and capital markets at Chainlinks. This is day 2 of my new job. For about 30 years, and we now call it fintech. And to kind of one-up Megan from this morning, the first time I ever came to level 39, it was a building site. So, and it's interesting. I mean, I do really think that we've been going through this past 15 years of fintech, of using technology, using innovation to make banking better, make financial services better. And we are, I think, entering a new era of maturity. So I'm really excited about having a discussion, a panel with all of you guys about this journey that we have had since, some people mark the financial crisis, some people mark when Bitcoin came about, let's just say the past 15 years, and today, and where we are, and if we are at this age of maturity. So I want you all to I'm going to ask you all an opening question, and I'll start with you first. We are now at 2024. Level 39 is no longer a building site. Looking back on what fintech promised back then and where we are now, are we entering an age of maturity? Did we get what was promised? Did we get something different? Did we get something better, worse? What are your thoughts?
Okay, that's a good one. I think there's a difference between what fintech originally promised and what investors bamboozle fintech into promising. So the original thought behind what fintech promised was they were going to make banking easier, right? Let's just do that. Cheaper, easier, faster. And a lot of the changes that have happened in the sector has been driven by that thinking. In some cases, we were terrified by what they were going to do to us, and so we quickly started to make changes that would not have happened. So there are changes in traditional banking today that would not have happened except for the threat of fintech. And that is, we give the credit to them. And there have been instances where it's been demonstrated that fintech has delivered. And in some cases, we keep looking for fintech outside banking. The problem is that some of the really good
So banks have copied a bit?
I don't know. If I take a bank like DBS in Singapore, I don't feel like they copied. I feel like they themselves became a fintech, right? I think in some cases, the delivery happened within the banking system, right? I see, for instance, the work that has been done by Santander in building the core banking, which is then made them very nimble. It's not different from Monzo building his own primary technology, right? So yes, fintech did deliver. What was not delivered was the subsequent promise to take over the world, and I don't think that was the intention.
It might have. I'm going to do the lazy moderator trick of just going down the line. So, Sabrina, what do you think? I mean, did fintech deliver on its promise?
Again, depends if you want to look at the half full or half empty glass. So I think there were over-promises. I remember when we said fintech will completely change the world. Banks will be destroyed.
I remember that time, the new utopia that we will be in with no banks anywhere.
So looking now, I looked at some data that the revenues of fintech together represent less than 5% of the revenue of banks. So they did not change the world yet. But I think fintech really showed a different way to do banking, a different way to provide financial services. So there is an aspect of fintech that has been, I look at fintech as the R&D for large banks or financial organizations that frankly didn't have the culture or the capability or the DNA to be able to think differently. I also want to differentiate between B2C, so the digital banks. When we think about fintech, we think about generally the first thing you think about is the Monzo, is the banks, is the banking, the new way to reach and empower people and businesses that did not have access to credit before, for example, banking services. I think there the progress has been slower, but there is another aspect of fintech, which is the plumbing. I run a RegTech, we do the plumbing, we empower financial service organization to better serve their customers. I think there, especially in the B2B, there has been huge progress. And frankly, if I can get Citibank or HSBC or the huge banks move even a little bit better towards better serving their clients, I think the impact of that is enormous. So yeah, I think fintech have done enough. The future is bright. Let's see what's happening in the next 10 years.
I'm going to stay with you a bit. I apologize to Barry and Alessandro because I want a follow-up question on something you said. I mean, we're sitting here in level 39. There are tons of tech founders in this building. You said fintech is R&D for banks. And I know in my past there have been some founders saying, I don't want to meet with the bank again because we're not, they're not going to buy our stuff. They're just going to copy us. It's going to be a waste of our time. And I think earlier this year at Finovate, there was a bank on stage that said, yeah, we just copy them. So this idea that fintech fulfilled its promise by being the R&D for incumbent banks, is that the future we want? Or like, how do the fintech companies feel about that?
So it's a good, let me talk about that. Sometimes I hear things like, there are no branches anymore because large banks understood that you can serve clients in a different way from fintech. They didn't. They understood that from Amazon. They understood that from eBay, from Spotify. So the entire move into digitalization has not happened because a few digital banks turned up. Has happened because the world has changed and the expectation of clients towards digitalization has changed. Now, R&D it can come in different ways. I frankly think that it's very difficult for a bank to copy what a fintech does. So the R&D is about thinking differently, is about the culture, is also about injecting technology in banks. So again, the plumbing of banks. Banks use things like RegTech, new payment system, core banking platforms. So yes, I do think that you can do innovation. It's easier to do innovation in a fintech. Banks can try and copy poorly. They can try and partner. I would stay away from that.
We're going to get into partnerships in a bit.
Yes, and Alessandro, he knows a lot about the partnership. He can say more. Or they can try and use you and buy you. And buying is like partnering, is like a poison pill. But using your technology, they do. Of course, it takes 18 months to 2 years to be onboarded by a bank. So it's not the word B2B in plumbing. It's not the word of rapid growth. It's steady, it's slow, and it will change the world. You just have to stay with it. So much more powerful than the hyper growth that we saw in some of the B2C, where frankly, it was a moment, but didn't change the fundamental of banking. But I think, to everybody in this room, look at what's happening in B2B, look at the plumbing, because it's going to change the world, and you won't even realize it's going to be too late to stop it when it does.
So Alessandro, the first time I met you was when I put you on stage at level 39.
I remember.
10 years ago. So what is different
It was more
besides...
than 10, actually.
Do we just have more gray hair now? Like what has changed?
I think we're more charming. I think the point about fintech and banks, I think banks have been transformed utterly by fintechs. And we sit around here. I mean, how many of you have made payments to your banks and suppliers just sitting here while we were talking? I mean, the whole concept of how banking happens today, it's become so different than what it was when we started talking, that it's all due to the fintechs showing the banks that there's a better way of doing it. So things like, for example, open banking, that opens their data. The data is no longer protected and safe, but it's shared. Stuff like mobile banking, the fact that I can bank while I'm sitting here chatting with you, which resulted in the branches closing, which resulted in me having to upgrade the way I run my core banking, which resulted in me thinking about how do I personalize what I'm providing to create a hyper-personalized proposition. So the segment's becoming smaller and smaller and smaller. Banking has transformed. Okay, banking is not the banking of 20 years ago. And for us saying, oh yeah, it's true, the fintechs have not been that influential, etc., they have been profoundly influential. Now, what's happened is that we had this vision 10 years ago that the fintechs would come in and replace all the big brands. That hasn't happened. But all the big brands transformed, and we're looking at fintechs. If somebody got Santander of today and compared to Santander of 10 years ago, would they recognize each other? Would they completely realize that transformation has happened? So in a way, the banks are like frogs in boiling water. So the water temperature is rising and they're still in there, they're flashing around, but ultimately their business model is not sustainable. Now, what is the frog? Is the frog the institution, or is it the frog a way of doing banking? And I think the frog is the way of doing banking. So the way of doing banking of 10, 15 years ago doesn't exist anymore, nowhere. Look at how many branches are closed. Look how many people are don't even have cards in their pockets. Look how many of you actually would go back to your house to get your phone, but you won't go back to get your wallet. How many of you have cash in your pockets? I mean, these things are truly transformational, and we think of them, oh yeah, it's okay, but it's not. It's sorely transformed. So has banking transformed because of the fintechs? Yes. Is it going to increase even further than it is right now? Absolutely. This is nothing. This is just the tip of this iceberg of transformation is going to happen. And I think ultimately what it comes down to, and something you said, Abubakar, earlier, is to focusing on the individual. So looking at, is this individual able to benefit from the services that I provide? That is hyper personalization. So instead of having 100 segments for 1 million customers, you have 1 million segments, and every segment is designed for you. And that is stuff that was unthinkable 10 years ago.
But then there are those million that aren't online and do deal with cash.
And that's the one thing is, for example, I'm actually writing a book with Megan right now about inclusive capitalism and inclusive finance. Technology is leaving a segment of population out because cash is becoming less relevant. But these people who are not able to go online to do their banking, they have mobile phones. And if you look at Tanzania
You haven't
and
met
Kenya,
my dad yet, okay? I'm just saying.
well, you should meet my mother-in-law. She's 93 and she does all her banking online. Okay, so they are not dumb people, the old people, but they slowly move on with that. And eventually, I think we all change behaviors. How were we 200 years ago? Did we think about taking the tube to go to work? No, but now it's normal.
All right, Barry, you got the final opening statement. How have you been the past 14 years? Are you happy with the changes that have made?
Look, if you ask the question 15 years ago, EMIs or fintechs will take over banks, it's not happened, and I don't think it will ever happen. If you're asking, and to your point, have fintech changed the world? I think absolutely. And if you look at it, even 15 years ago, right now, not just changed what we're doing today, but also changed the mindset of retailers and organizations to understand that the payment is, in my opinion, more important than the product. And that was always overlooked with industries that we sell this is our product, this is what we do, and if you want to buy it, here you go. Nowadays, you'll get to a point where you can buy the same product somewhere else if it's faster. So I use an example. I came home from work one day. I was extremely tired. I was looking on my phone for something for my daughter, and it asked me at the end to go and put my card in, which was upstairs, and I was lazy and didn't want to walk upstairs to do it. So I abandoned the car, I went to another site, had Apple Pay, and paid for it. Same product. The important bit there was the payment event.
Yeah.
And I think that's the change really as well for where we are today, is that choice for people that you can do things at pace now. In a multitude of ways you can make a payment for various different rails, whether it's card, bank payments, digital assets, open banking. There's so much choice now that the organizations are realizing that they need to give that to make sure that they get their products sold.
I'm going to stay with you for a bit because, thinking back to the early teens, the World Economic Forum put out a report about the impact fintech was having on the industry. And they specifically defined fintech as small, new entrants tech companies, and specifically not large banks and not big tech. And I have a kind of a bugbear. I hate in copy when people just write fintechs instead of fintech companies. So, are we 15 years ago, fintech was a company, was a startup, was a tech focus. Is it more a concept now? Like, how would you define fintech?
I think it's similar to embedded finance. It's a concept of what you make of it. If you take the size, look, we're not a bank at OpenPaid. We don't want to be a bank in terms of, we wouldn't try and attract a tier one that's looking for credit facilities, but we provide embedded finance and financial infrastructure for corporate entities that need to make sure that the payment event or the account event is part of their proposition. That's key really for growth in this market, something that typical banks tend not to offer. And size-wise, there are EMIs or fintech, whatever you want to call it, that are a similar size to many banks, not quite the tier ones, but to many banks now.
So maybe I'll open up to the rest of the panel. I mean, outside of what's your favorite sort of fintech company, but sort of your fintech concept. I mean, many of you've mentioned embedded finance, open banking's been mentioned, personalization. No one's mentioned crypto yet. Anyone love crypto? What are some of your favorite fintech concepts that we have now? Maybe I'll come back to you, Abu Bakr.
I mean, just to comment on the first question, which is how fintech has changed the world. I think we also forgot how banks changed fintech. I think to a large extent, what became of fintech was because they didn't realize that once you open the hood, there's a lot there that you didn't understand. And also there was also the fact that fintech represents an experimental opportunity that could never have happened in a bank because one, they have so little to lose, so they could take a lot of risk. And because they were so small, the regulators allowed them to experiment. So it's important that we protect that way of thinking because no bank is going to take a $50 billion balance sheet and take a risk on it. But you could do that with a $5 million startup. So that's something we should be very deliberate in protecting, that idea of front runners, people who can go out there and open up the space.
I think that leads to there are so many payment startups and so many of them fail because people don't realize how complicated payments really is.
And nobody died. You could just wake up and move on. My favorite use case, I think about it as a use case, is still down to tokenization. I think for my continent, it's the most underused opportunity that we have because it can bridge the gap, the trust gap that we're facing. It can also bridge the capital or the wealth gap that we're facing. So good example is I've got a grandmother in the village who's got this family land that they've had for 500 years. And he has no other use other than to put, crop in it. You can use that as a collateral. You can use that. Just this idea that there's so much wealth that is locked out of the financial system. And this wealth sits with the most vulnerable people. Right? That would be my most, if there's one thing that I wish we put a little bit more time onto, it's how to make sure that we bring everybody's asset onto the fore so that they can then participate in the global economy.
Anyone want to pipe up on your favorite fintech concept right now?
Well, I said it before. For me, my favorite concept is the one that works like an SAS team that goes beyond enemy lines inside large organizations, act as a virus and make large organizations more impactful. So everything that is able to allow for digitalization, for augmentation, for automatization, whatever is the word, everything that makes large organizations that really have millions of clients to work better for their clients, I think in a certain way it's difficult to do, but the impact is enormous. So that's my preferred type.
Interesting. Alessandro, what do you think?
Well, I think there's two ways of looking at it. I think one is a technological solution that is, I think, is the game changer, which is the banking APIs, open banking, because that has several outcomes. One is optimizes, improves payments, which is at the core of financial services is payments. Secondly, it opens up the data, so the service that I receive from one bank becomes completely transparent, so I as a consumer can move around. But also, through these APIs, the banks can offer me a wider range of services because they can work with partners. And they can embed the capabilities in there, and create a service proposition that is centered around me. Which is interesting because when you create a bank that is centered around the customer, makes the ideal digital bank the bank of the Middle Ages. So if you look at the Bank of the Middle Ages, was a bank that was created between the interaction between the banker and the customer, and the banker created a product that the customer could use, and the customer had to trust the banker because they know that we are in the same community. If he screws me, I'm going to destroy his business. Okay, he will be ruined forever. So that's the thing. So the technology, the open banking APIs, will create a whole series of things that aren't thinkable today. So I go into my bank, my trusted bank, but my mortgage is provided by somebody else. My travel insurance is provided by somebody else. But it's all embedded into that. So that's one dimension. The other dimension is philosophical. So we are started thinking about ourselves. The bankers have changed the way they think. And the biggest challenges we have for banking innovation is legacy. And legacy is not, I have an old core banking platform. Legacy is, I think like I used to think 30 years ago. I've just transformed that algorithm that I created for something 30 years ago into a modern platform. I have, give you a silly example. I have a bank account, when I started my business, I had a bank account with a UK bank, and it took me close to 10 days to open the bank account live. I then became a board member of a challenger bank, a fintech, and it takes 10 minutes to open exactly the same account. Exactly the same laws, same services, same capabilities. 10 days, 10 minutes. Okay? That's legacy and not technological legacy. That is mindset. So mindset and technology are the two things that are changed.
Excellent. I mean, I wanted to do a little bit of a deep dive into partnerships. So I'll stay with you, Alessandro. I'll go to Sabrina. Some of the biggest challenge question I often get from people wanting to know more about this space is, show me a successful bank fintech partnership. They're like, which one? You can't find one, can you? So, I mean, what is it? I mean, how have there been successful bank fintech partnerships? How do they work? How do you get Jupiter to talk to Mercury, even though they're in the same solar system but completely separate entities? How do they work? I'm going to you first.
I think they work well when they know exactly their boundaries and that they have a channel of communication established between the two. So my business does exactly that. We bring together established scaling up companies and corporates and larger banks. And we realize that the biggest problem they have is communication. So they have objectives and timelines and visions of the world is very different. So being able to engage with each other in a creative way that benefits both sides is fundamental. And whenever you create a partnership, that is the area you have to go at. So who benefits and how do I benefit from this relationship? And you see it in partnerships like, for example, Tink working with all the banks that is doing it. In theory, that could have been seen. You wanted an example, I gave you one. Don't ask me for any more. They were started by a bank. They then were acquired by Visa, but they're still providing a service that is very, very worthwhile. And it's based on open banking. It's not competitive with the core of the banking capability, so the bank doesn't see them as a challenger, but it sees them as an enabler. So things that are important partnerships to work is that I am not eating the bank is not eating me. Mm-hmm. We are complementary together, and what we create is bigger than the pie that was there before. I think these fundamentals are...
Yeah. So Sabrina, am I correct? You sell into banks with your company. So tell me some success stories. What have you seen?
Sorry?
Some success stories.
Yeah, well, obviously, depends what you define as partnerships. I do not believe in a partnership where there is an exchange of ownership. I'm very cynical about that because it's something that you said before. The risk appetite of a bank is completely different than the risk appetite of a startup. Mm-hmm. Where you try to mix that, you're trying to create a mix which is really difficult to maintain. So if a partnership is a company like mine working together with a bank, trying to achieve something together, but you stay in your home, I stay in my home, I think that works very well. We work with large organizations like ING, Rabo, NatWest, Lloyds, Intesa Sanpaolo, and we have a fantastic partnership because we have a common goal. They trust that we can help them doing something that they couldn't do alone, and it works. But it's a partnership based on us providing a service to a group of people that see the value of it.
So it's a vendor relationship, and partnership is just a marketing term.
I agree. Despite what I notice is that some of the clients that we cover, they really don't like to be considered as clients. Mm-hmm. They want to be considered as partners. And frankly, to be honest, I think they are, because especially our first clients, they took a risk on us. They really took a risk in taking this small startup and stick it into the heart of their product engine. So for me, they're not really clients because client is more a transactional relationship. I do think that there was somebody there that took a risk. And for me, that's a partner.
I'm going to stay with you for a bit because I'm going to move on a little bit to not partnerships or vendor relationships, but building in-house. And then I'm going to move on to you, Abubakar, afterwards. It's been mentioned the Santander giant global core banking revamp, which I wrote about last year, and it was very interesting when I spoke to them. Like, they not only revamped their entire global core banking, they didn't have a core banking vendor because they couldn't find one they liked, so they built this in-house. And we've talked a little bit here on stage about copying fintechs. Is this a new trend that you're seeing, that there's doing a lot more in-house building?
I think is a terrible trend. Sorry, I have very strong opinion on this. I think that banks are not tech company for as much as they pretend to be. Again, it's a matter of risk appetite. It's a formula. You cannot be a tech company. I think banks should do what this bank is doing, really focusing on the clients, finding the problem, finding solutions. But when you try to create, when you're trying to build in-house, you are, in a certain way, you are not, you show little loyalty to what is your mission. And also, I don't think you are better. I really think that the way the banks work is, it makes technology very expensive, very complicated. I see the trend, and I have a theory. And I don't know, it's going to put me in trouble again.
I want to hear the theory.
Yes, the theory is that every time I found a company, a bank or a financial institution that says, I can build this, it's never them. It's some consulting group behind them that says, you can build that and I will help you. So, yes, there are large IT estates that want to survive. Yes, there are lots of consulting firms that need to maintain the market presence, and I think that fintech is very disruptive, not really for the banks, but for some of the consulting companies out there.
So it's interesting. Back in 1995, a large bank told me that they were building their own operating system in-house because they didn't trust Microsoft. So what do you think about this trend? Should banks build everything in-house, or are you really a tech company with a banking license?
Okay, I think that a racing company should own its engine, right? You can buy any of the other parts. There's got to be something that's at the core of your competitiveness, and you have to decide what that is. There was a point where it was your talent, and if you have the brilliant bankers, you won the game. I don't know what that is going to be for banks in an age where the majority of what they do is leverage on technology. And I don't see a future where you think you're going to have a competitive edge that is unique to you if you all bought the same technology, right? So it doesn't mean you should build everything. It means you should determine 5 years from now, 10 years from now, what is the one thing that you must become good at? And for me, some of the technologies fall into that. To answer the first question, every successful fintech bank relationship turns the fintech into a large company and stop being a fintech. So you're not going to see them because they've now become very large companies doing partnership. What I like is the idea of co-creating. I think for a bank, you should co-create what I call your fundamental technology with technology companies. But they should build it for you. You should own the IP. You should have some level of control over how you can adapt it to a changing world. Otherwise, you are all just going to go to the same vendor, buy the same product, and put a slab of paint on it and say you've got a different bank. So I do think that we have to build some, but not everything. I think some things are better off shared. Nigeria has a very good example of what a fintech, rarely ever called one, could do for the ecosystem. It's called Nigeria Interbank Settlement System, NIBS. And they build the engine for what is now the instant payment in the country. That is the foundation for all the fintech that have come after that. But it was banks coming together with the regulators to say, we need to solve this problem. And they vested a company that then solved the problem for everyone. That is the kind of co-creation I think ecosystems that banks should think about. But you've got to build your engine. If you're not building the engine, someone is going to buy the same engine and outcompete you.
So you can just say, I think that's different though, because that is a tech company that does banking. Is, I think, when we think about the large organization, you mentioned Santander, that's a different concept. So having established large organization that decide to do a project of that type, that's a tens of million, multi-year project. It's trying to build something from scratch when there are best practice out there that already exist. That I think, there is a question about the ROI of that investment.
Interesting. So I know, Alessandro, you're jumping up and down.
Yes.
No, I think you're absolutely right, Abubakar. I think having a really distinctive proposition to your customer is a fundamental element. The problem is you don't have to build it yourself. Okay, so that distinctive flavor that you create about engaging with your bank is based on a series of components that you bring together. You don't have to make all of these. Now, in a world that is evolving as quickly as the world of financial services is today, having created a platform in-house is a really, really risky proposition. Because how are you going to pivot if, for example, that technology that you used is no longer valid? Okay, or that product becomes obsolete or regulation makes that impossible. If you have created a situation where these services are provided by partners and you can plug and play, you are the owner of the Lego that you've created, but you don't have to build every Lego component, every Lego brick. And I think that's an important thing. One of the challenges that we have that banks are actually increasingly building stuff themselves is the fact that the first stop that the tech company does when they go to a bank is they speak to the CTO or the CIO. And ultimately what happens is that, sorry, I don't want to offend anybody here, but if you go to the CTO with a new proposition that is completely revolutionary and really does better what they are doing already, what you're saying to them is, we could replace you with this fintech is a lot quicker. So the first thing the CTO does is, how do I protect my turf and my environment? So the first thing that they will say, we can do it in-house.
Office
Why you want to waste all this
politics,
money
eats
on
tech
this?
for breakfast.
And I'm sorry, I agree. I'm being a little bit disingenuous on this thing about all CTOs obviously are very caring and smart individuals. But ultimately, there has to be a reason why you bring in this innovation into the organization. And the reason for that can only be one thing: welfare of the customer. Large, corporate, SME, consumer, everything. There has to be that. And you have to put together a component of service that makes you distinctive and generates value, because that's the only way you guarantee your longevity.
I think looking at it from, again, a non-bank provider, I would argue that we partner with every bank we work with, and every single financial institution, EMI, fintech, whatever, is a partner to the bank. We process 6 billion euros per month, over 2 million transactions. We cannot do that ourselves. We need the infrastructure from the banks around the world to help us do that. Mm-hmm. So whilst there might be competition at time, that partnership's key for us. Having the core banking underneath where we can build the infrastructure on top to then provide all of these services to our customers, it's vital that we have those partnerships in place. So I guess if you're looking at it, do you partner together where you're taking something to market, or are you just partners? I would say that exists today with every single provider in the market, with every single bank they work with.
Is there a difference between supplier and partner?
I would still say they're partners of ours. Yeah. We work together. We look at new product offering. We look to see if they have new solutions or new currencies or new rails that we could add in. It's a partnership together. We bring in the aggregated volume. We make it very attractive to the bank to have us.
So I'm keeping on you, and this was not a previous question I had on the list, but it's talking about being a non-bank provider and then relying on the bank. And a bank is a secure, regulated entity, right? That's where the customer trust comes in. And this is not necessarily relevant to what's going on here or Europe or in Africa, but there was a big scandal in the U.S. with the bankruptcy of Synergy, where people thought that was FDIC, their money was protected, when it actually wasn't, because the underlying banks were still around. And that's because there was this kind of disconnect between, where the liability goes and where's the protection. Like, how, from the customer point of view, who just wants to make a payment to buy their daughter a present, how do we as an industry ensure that trust is solid? That that there's a place for the bank, there's a place for the fintech, there's a place for the payment, there's a place for that seamless thing, where something like what happened in the U.S. doesn't happen in other places around the world.
Very good question. I think again that partnership piece. We're not a credit institution, so we need banks to safeguard client money. We have regulations in the UK and in Europe, very strict around safeguarding. So we need to work together to make sure that client money is safe. When it comes to fraud monitoring, when it comes to transaction monitoring, all that protection is still there from a bank, and actually doubled up because an EMI in the UK, we have our own regulatory obligations. So we are doing exactly the same thing the banks are together. I would say that it works together well to protect clients and end customers.
Can I just say one thing we haven't mentioned with the evolution of fintech and banking, etc., is regulation hasn't stepped up. So there has to be a regulation that does not stop everything, but at the same time protects people from situations like the one you described.
Yeah.
So when the reason the automobile is so popular is because we have stop signs and we have speed limits. Okay, that doesn't mean that cars cannot go around, but we have to create rules of engagement, and the rules of engagement today are lacking. We have to be a lot more creative and more intelligent about what the banks and financial service institutions come out to.
So, Sabrina, I'll go to you because we've had a lot of discussion around kind of the evolution of banks in this world. And a number of years ago, it was very common for people to tell me that they would meet people at banks that don't know what an API is. I've been writing about technology for a very long time. I covered technology at the Banker. Is that true now? I think it might have been. I mean, is this been your experience?
No, I think actually the people I work with and meet in banks are quite smart in terms of technology. What I observe is that where I'm a little disappointed is culturally. It's like all the language is there. All the tribes, the agile, the everyday banking. Nobody uses anymore the word current account, for example. So the jargon has been taken on. The technology, the understanding of technology is okay. It depends, of course, who you speak with. But sometimes it feels like, do you say a coat of paint? It's very superficial.
Fintech washing.
Yeah.
Yes. So, and again, banks have a different DNA. They've been designed for not innovating and not taking risk for very good reasons. So it will take a long time. But in terms of the technology education, I haven't found a big problem.
So we've got a little bit of time left. We're going to ask a final question of each of you, and I'm going to do the lazy moderator trick in reverse and start with you, Barry, and go down the line. But we're going to talk about the next generation. I have a 19-year-old in-house, so this is the Zoomers, the Gen Zs, and it seems like every young person is going to change the way organizations and companies and banks deal with that customer base. And so Gen Z is just the latest, and they're going to be all different, and they have different needs and different wants. Do they? Like, what are you seeing from the 25 and unders coming up and being the wealth owners of the future?
Yes, they are different, in my opinion. We had a call previously about this, and I said there used to be a statistic that you were more likely to be divorced than you were to change banks, and that doesn't exist anymore. Like nowadays, people will move at the drop of a hat. It's so easy to move your bank; they will do everything for you. And you can chop and change if one isn't giving you the value that you want. So I think that is a generation that you need to adapt to. But it's also a generation that can actively go out now and find things they want to. Like, for example, you can go onto YouTube and learn how to trade crypto or stocks and shares. There are now platforms you can go and do that on. That didn't exist.
That's not investment advice, though.
No, sure. Not investment advice. But, these kids are learning from TikTok how to get financial advice, how to buy stocks and shares, this type of thing. I think that's a huge shift in where I was at 25 a couple of years ago.
What are you seeing, Alexander? What age group do you have in your house?
In the 20s.
Yeah. Okay.
And so that's exactly the thing we're looking for right now. I think they haven't changed at all from us. Ultimately, why did we open a bank account? Is because we wanted to pay or receive payments. We wanted to get a credit line, or we wanted to protect what we already had. And protection means from a savings account to insurance to pensions, et cetera, et cetera. So we have these three needs. And what we needed from the bank is advice to bring all of these three things together in a way that I can actually feel confident that the bank is delivering these to me. That has remained. Now, what you're saying is absolutely true. So my daughters, I opened them a Lloyd's bank account because I used to be a Lloyd's person, and they never use it. Okay, they're on Starling, and they use Starling all the time.
They never watch TV either.
They never watch, well, unless we put a show on Netflix for them. But they do get a financial advice. They do look on social media, but they are also aware that most of it is bullshit. Okay, stuff that people our age are not aware. So we see a video, we say, "Oh my God, this must be true." No, it's not. They know it's not true. And so they have a lot more understanding, and they put a lot of data points together, which also leads to the point, as we were saying earlier, is that they are a lot more outcome focused. So if the provider does not deliver what they want, they just switch. And the example that you said about I don't want to go upstairs to get my card and I go to Apple Pay and change provider, it's exactly the type of thing that happens today. So they still have those basic needs, which are the same needs that the medieval banker had. They had these three things he wanted to do. And banking has not changed at all in thousands of years. What's changed is the way it's being delivered, and our kids still have the same needs, but they fulfill them in a different way. So that's the thing.
Sabrina, what do you think?
Yeah, I got a bunch of those at home. I've got 3 kids from the age of 17 to 21. So I agree.
You're so cute at that age.
Yes.
Yeah.
I actually am very positive about these kids, the generation. I think it's true that they have lots of wisdom, that much more than we give them credit for. They're much more aware of their rights, their expectations. They're also aware of the environment. They do lots of peer-to-peer transactions, stuff like that I didn't even know about. But I used to work at Coutts when I'm a reformed banker. So I worked in banking for many, many years, and lastly at Coutts. And we did a piece of research, I remember at that time, about wealth management, and where you is more conservative in the way that they make decisions for their wealth, for their savings. Actually, the young generation really appreciates a chat with somebody when it's about investing for the long term. So, and I think there is the ability to use TikTok and social media and get information, but I think, as you say, they're not naive. They're really not naive. But at the end of the day, what the research showed was that there is, especially in wealth management, in savings, in making big decisions for life, there is a desire to connect with somebody in person.
So yeah, Abubakar, what is it? 50% of Nigeria is under 25?
Yeah, more than that, actually.
So you're the expert on the young
Yeah,
people.
about 70% is below the age of 18. So it's one of just. Actually, it's interesting to see the number of fintech founders and fintech managers that are former bankers, and somehow you wonder, did they, replace their brain? Did they replace their brain when they were shifted to?
If you want to go behind enemy lines, you better know the territory.
When you've seen hell, you want to walk away from it.
That then tells you that it is possible for that to happen. I have an 8-year-old who would come to me once or twice a week to ask me the exchange rate. She's got some naira in her little kitty box, and she wants to buy something online on one of the games she's playing. And I'm not going to pay for that because we've not classified this as educational. She wants to pay for it, right? And so, yes, that's the kind of conversation. She's 8 years old, and she's talking exchange rates, right? But what I see as the most significant change, and I think it will happen over the next decade or so, is the concept of value, right? Before fiat became the primary concept for value, they were real assets. And the most you could do was go to commodities, precious commodities. And then we've got this close to 100-year period where fiat had become the primary measure of value, but also the primary store of value. I foresee a situation where there will be significant rethinking as to what constitutes a store of value, and that change in what we call value will define the behavior. I don't think it is about how we use technology anymore. Some of that is going to be incremental at best. But at some point, you would find that somebody does not own $1 or just doesn't own it because he doesn't need it, because you no longer. I mean, one of the exciting products that the alternative bank, our bank, put out recently was, you know what, would make an investment for you in a gold coin. And in the back of that goes, we issue you a credit card. And so you don't even have to have a naira. You can always spend a naira. We give you a period to pay back. And so she certainly never owed naira, never earned naira, where you could spend. So what is going to be value? This generation, I suspect, on the back of the geopolitical changes that are inevitable, will transform what value means, and that will transform the entire understanding we have of the future.
We've got 5 minutes left. Do we see if there's a question? Anyone have a question from the audience? Right there, right in the middle. If you could say your name and where you're from, that would be really good. Sorry. We can probably hear you.
We can hear you.
Yeah.
My name is Henry Ndukawanya. I work in cyber risk. I found this whole conversation rather interesting. What I haven't heard, especially given that the backdrop of the anticipated delivery of financial services in the future is leveraging on technology, not like how it used to be in the past where it was maybe abacuses and stuff like that. Viewing things from the perspective of the very immediate future, the very immediate past, as well as the future, as well as the present. What are your views on what risks there are going forward, particularly in the short, the mid, and the long term? And this is from the cybersecurity perspective, not finance.
So, shall I have a quick...
Go for it. Go for it.
So I think what worries me the most is a catastrophic collapse. Okay, that somehow the cloud gets hacked and then all the banking stops, or that we find some kind of a virus that migrates through mobile devices and actually shares everybody's login details and the whole banking system collapse. So I'm not too worried about individuals being hacked, but I am worried about the system being hacked. And I think something dramatic and catastrophic happening from that. So when people say cloud, I always think, okay, think about you can't have one cloud only. You should have multiple clouds. You shouldn't have only one infrastructure that you use for whatever service you provide. So we need to create some redundancy in the system to make sure we're doing that. Are the regulators who are responsible for this and the governments who are responsible for this aware of these things? Conceptually, yes.
I guess the DORA, looking now.
Digital Operation Resilience Act of Europeans. So they are saying, okay, you know what, Mr. CEO, if your IT guy screws up and your system collapses, you are responsible too. Certainly all these CEOs in Europe are saying, oh my God.
But a lot of governments are looking at quantum safe in the future as well, though. Yeah, go on. Yeah.
So I was going to say that I actually worry more about what the government could do with the power that comes with this.
It's true.
And I don't think
it's a balance, right? It's a balance between.
I don't think we're far from a universe where this becomes the new nuclear bomb, and anybody could pull one on the country and ground it.
I agree. Actually, I agree with both. I think the cloud is the most disruptive technology that ever happened in financial services, because the cloud allowed service provider to be used by banks. Before, banks were closed. Environment, you couldn't do anything. Then the cloud came. So I think a systemic risk in the cloud will be a disaster. I also worry about what government to do. So anything about central bank digital currencies, the fact that you can program them and decide what they can use for, I think is a big risk. I think that can really infringe the liberties of people. So I worry about that. I worry about something else, actually. We haven't mentioned the AI word today much. Like generally, everyone speaks about AI, but there is a concern about dark Gen AI, and there are already LLM models that are used to trick people, to do frauds. So lots of risk is what you want to see, what we see in front. I think both my colleagues and the Gen AI use badly is definitely things to look, to be careful about.
Excellent. Yeah. You got one? Got one? Okay, we got a minute left.
Then, Michael Anifantakis, I think. I know most of you, so Liz, amazing questions. I've been gagging to kind of answer them rather than ask one. But I think I'll jump onto what Sabrina was just asking. I'm surprised that you didn't talk about AI and Gen AI and something that is about transforming banking and technology. So I would like to ask that question to a couple of you, or at least tell me what you think would be the role of AI and Gen AI in this next 5 or 10 years of banking transformation.
Should I go?
Yep.
Good to see you again. I think it's not going to be robo-advice, so relax about that. That's not going to be a major problem. I think it's going to be very useful in monitoring the efficiency of the system, making sure that's identifying cyber risk before they actually occur, so things of that kind. I think ultimately AI is the bringing together of three things. It's processing power, incredible processing power, algorithms that are smart enough to understand things, but more importantly is data. So homogeneous pools of data, gigantic pools of data. When these three things come together, you can create artificial intelligent products that do that. Now, the question is this: there has to be limits put into this place. And again, go back to what I was talking earlier with. I love your face turning around about regulation. You don't like regulation, but regulation is indispensable, I think, for making sure that AI operates. And I think AI can take over the universe if we let it. And I think AI is not intelligent, but it definitely follows the rules to the letter, which is a really scary thing. If you're a dictatorship, that's a fantastic tool to have. You have an army of thousands of people, millions of people that are also constantly monitoring every citizen. So I think risk of AIs are that of being taken on by a organization, a government, an entity that actually uses it to methodically attack all vulnerabilities. And I think that's important. To stop that, I think we need to create a regulatory environment that goes beyond regulating the specific, but regulating the big picture. So if you have a self-driving car that kills people, who is responsible? Is it the guy sitting in the car? Is it the guy that manufactured the car? Is it the guy that created the code for the car? So I think creating a series of hierarchies of responsibilities, I think is fundamental. Yeah, so.
We are out of time, unfortunately, unless anyone's got some massive, really quick words of wisdom. Nope. Anyway, they were awesome. Lovely. Thank you, all of you. Thank you. Thank you very much.
Thank you.